What are the top reasons that I've seen why first-time buyers have taken their time buying? These reasons I'm going to cover today, and hopefully it will help you and you'll get to learn some of them aren't right, some of them are slightly right, some of them need a bit more explanation. So I'm going to give you the 5 top reasons that I have seen with my clients, my first time buyer clients, of why they haven't jumped on the bandwagon and got their mortgage. Now, my name is Manda. I am a finance coach and mortgage advisor, so I call myself the mortgage coach. Now, I have helped hundreds of first time buyers over the years, and I want to help you. Now, the first one is I thought I needed a bigger deposit. Now, quite a lot of people out there, when you ask them what's the deposit size that you need, everybody has this idea. And one client actually thought it was 20%. Now, you can actually get 100% mortgages. You can get 5% mortgages. So you don't have to, when I say 5% mortgages, I mean 95% mortgage and 5% deposit. And 100% mortgage, that is exactly what it is, 100% mortgage with you don't need a deposit at all. Sometimes that's with a second charge and other things, but that's a whole different video. But just to let you know, yes, it is good. The bigger deposit you have, the less of a risk it is to the bank, so the better interest rates they're going to give you. So it definitely does have its advantages. If there is the element of property prices and potential of negative equity, if you haven't borrowed 100%, then you've got whatever your deposit is a buffer for prices going down. But generally speaking, you can get a property for no deposit or 5%, very little deposit. So that's not a reason to hold yourself back. What I would recommend is you speak to a mortgage advisor and actually find out how much deposit for your current situation that you need. So obviously the 100% mortgage has certain criteria. Do you fit that criteria? So it's definitely worth asking a mortgage advisor, or if you want me to do a whole video on it, please let me know. The next one is my credit score has to be perfect. Now, at the end of the day, it doesn't matter. I've even been able to get a mortgage for someone with CCJs. It just depends on the rate. So different lenders will accept different criteria. So if you've got a really good credit report, then great, you're going to get a better deal, which is the product fee plus the interest rate you'll be charged. But if you've got some missed payments or arrears, or CCJs, which are county court judgments, defaults, you're on a payment plan, you've had payday loans, any of that kind of thing, it's all under the umbrella of adverse. There are adverse lenders. So as long as, you know, you might have to put in a bit more deposit, or you may have to pay a different interest rate, but it is doable. Again, speak to a mortgage advisor and they'll be able to tell you what is out there for you. Sometimes it's worth doing a little bit of work on your credit in order to improve it, in order to get a better rate and therefore a better deal. But at the end of the day, pretty much you can get, you don't need perfect credit you really, really don't. So to get that mortgage. The next one is I can't buy if I've got student debt. That's not true. At the end of the day, it will affect how much you can borrow. It will reduce it. But at the end of the day, you still can get a mortgage. You still can get a mortgage. So it's all about working out your affordability. So when you're looking at your affordability, not only are you looking at your income, but you're looking at your debt. So that would be credit card debt, loans, student loans, everything, all incomes into one. And the best way to work out your affordability, again, speak to a mortgage advisor, because they can actually tell you, okay, this lender will accept X, Y, and Z, this lender won't, and that kind of thing. And they can tell you this, even though this lender isn't doing the best deal, the best rate, they may be willing to offer you more on affordability than maybe another lender that is offering you a better interest rate. So you have to make some kind of compromise, but it is doable. The next thing is renting is cheaper than buying. Now, I understand you have to get a deposit together to buy, But again, as I said, depending on your circumstances, you might be able to get 100% mortgage. But then on the other hand, when you're renting, you have to get a deposit as well, don't you? You have to get, sometimes it's 2 months rent, sometimes it's one, but sometimes that can be hefty as well. So it all really, really does depend. And I mean, like my dad always used to say to me, renting is paying someone else's mortgage, so you're literally just giving money away. I think the only way when you're renting that you may possibly get some of that money back is when either it's a shared ownership and part of it's rent and part of it's mortgage, and then that way, you know, it's not 100% renting, it's not 100% giving it away, some of it you are owning. But then also there's the right to buy. If you rent for a certain amount of years, then when you apply for the right to buy, you get a discount. You can get up to, if you're in London, 136,400 as of this recording. So, you know, you may have been paying rent for all these years, but then, you know, it's like a saving pot. You've been giving them rent, they've been putting it into your discount, and then they give you the discount, and that acts as a deposit. And I've got a whole video on how right to buy works. That's the only way. The majority of the time, you're literally just paying someone else's mortgage, which is why sometimes it's quite a good idea to get your own buy-to-let, so someone can be renting it out and paying your mortgage. But that's another story, and I'm more than happy to do a video on how that works. And then the final one is the asking price is non-negotiable. Every single property I've bought, I've always negotiated on the asking price. It's like it's expected. Now, it really does depend on how many, the circumstances, the condition of the property, how many other people are putting in for the property, that kind of thing, how quickly you put your offer in after the property has been listed, that kind of thing. I would definitely do my research. If the property's been on the market for months, then negotiate. If the property is a little bit, you know, it's not 100%, it's not a key turnkey property, sorry, i.e. you just turn the key, move in, and you don't have to do anything, then it's definitely worth negotiating. Obviously, you've got to weigh it up. If there are other people also putting offers for the property, you have to be sensible. But at the end of the day, generally speaking, the asking price isn't the actual price. It's not like when you go to the shops and they say that is the price. You know, it's more like if you go to one of the corner shops and, you know, you kind of barter with them. So some people feel more comfortable with bartering than others. So sometimes it's, you could even get a friend to barter for you. I've even bartered to help my clients out. So it really, really does depend, but that isn't the make sure you do your research, make sure you go on Zoopla, Rightmove, find out how much the properties on that road are going for, and that kind of information. So I hope that has answered a few of your concerns. If you've got any more, please put them in the comments. If you've enjoyed this video, please like it, please share it for other first-time buyers so they can get some benefit out of it. And please subscribe and keep on watching my videos. Thanks for your time. Take care. Bye-bye.